Rahul Bhuskute is joining us now from BOA AXA Life Insurance, the CIO there. Rahul, afternoon. Thank you so much for your time. Markets seem to be in very good shape right now, but are the markets ignoring risks on valuation front, or are you of the camp that earnings quality of corporate India, the corporate earnings to GDP ratio is actually improving, and hence the decline will be cushioned by earnings? Which side of the camp are you?
Yeah, so I guess clearly markets are at a high, and we do believe there are reasons for the markets to do so. Obviously, first of all, globally the interest rate cycle has peaked out. Interest rates, there is an expectation that interest rates will start coming off. Definitely in India, we've clearly passed the point of highest rate. And therefore, the opportunity cost for an equity investor is low. And we do expect that to be a continued tailwind for the market going forward. Two, geopolitically, politically, economically, India has been a safe haven. And to that extent, these latest state elections have given confidence and assurance to the investors and the markets of political stability and policy continuity. So that's again, a very significant factor from the Indian market perspective. The earnings, as you mentioned, Ajay, the earnings delivery has been decent. We've had a very decent earnings outcome after a bit, where we've not seen any, downgrades or cuts to the earnings estimates. There have been more upgrades than downgrades, and I think that will follow in the continuing year. So logical, solid grounds for the Indian markets to do well. We do expect the earnings based underpinning to continue in the next year. So from that perspective, at least we are in the camp that from the perspective of earnings, the market should see a good outlook even next year.
Rahul, you made a very interesting point on flows, that the trickle has started, but you expect liquidity gush in the new year, going into elections, and even a few months after that. What does your studies say on flows? Why are you so confident of flows from the FII side coming back? Domestic flows have been very healthy.
Yeah, so Ajay, as you rightly said, that clearly amidst all this euphoria in the Indian markets, FIIs have been the notable absentee. In fact, 9 months of this financial year, we have hardly seen any FII outflows. They have almost been, the net flows have been zero almost. So, right, so from that perspective, we do expect the FIIs to have a relook at the Indian markets next year. Clearly, they have also been driven or guided by the interest rate narrative that's been happening in the West, and interest rates speaking out will mean risk on coming back to the FII table, and especially emerging markets and India within that should be an attractive place to invest in. Emerging markets are at almost like half a century lows as compared to developed markets, and therefore valuation wise emerging markets should be a sweet spot. India within that should also continue to be attractive given our domestic structural story, given our safe haven status, politically, economically. Also, I would think that for FIIs, the valuation in the Indian markets have been a bit of a concern. That's what we've heard repeatedly. Now, some of the FII favorite sectors have not done well. Mega caps, where they typically invest in, they have underperformed the broader market significantly in this year. So I think from that perspective, the FIIs will have a fertile ground to invest in, where some of their favorite stocks and sectors have not really rallied that much, and therefore the valuation concerns around those are not that significant. So we do expect the FIIs to make a return to the Indian market in the next calendar year.
Confident are you on earnings quality? At Bharti AXA Life, you must have taken a very deep dive in all your universe of stocks. I want to understand what's the visibility you get from the universe of stocks you guys own in terms of earnings momentum this quarter. I mean, last 2-3 quarters, in the face of a lot of nervousness, we have fared okay. Do you get the same feedback when you talk to the managements of most companies, or in aggregate collate your thoughts on earnings quality?
Sure. So, see, as I mentioned earlier, Ajay, clearly this is one of the few years in the last many that we have seen earnings not in line with not move, going in line with expectations. We have seen more beats than misses. So I think from that perspective, for the financial year 2024, definitely the first 9 months, earnings have been a solid financial outcome, and that obviously has emboldened the markets to new highs. Going forward, if we look at the index and the earnings therein, we do believe that the earnings should continue. I think this is, perhaps a multi-year phenomenon for us. If I look at it from a sectoral perspective, the financial sector has continued to deliver brilliant earnings over the last 2-3 years, and we do expect that to continue. Clean balance sheets, solid NIMs. Perhaps there might be a little bit of NIM pressure over the next quarter or two, but the NIMs continue to be high, and the credit growth on the back of public capex and hopefully private sector capex coming soon, given that the capacity utilizations are almost 80% and above in many industries. We do believe the financial services sector should continue to deliver solid earnings. That is by far the largest sector in the index. If I look at the next two sectors, IT and FMCG, again, we do believe that the earnings in these two sectors should start moving up. The earnings growth should be more positive than negative in these two sectors. So these are the top 3 largest sectors of the index. Other than that, there are many smaller sectors like real estate, power, industrials and manufacturing, where there is a clear growth runway of the next 3 to 5 years. And those should also start contributing to a solid earnings growth outcome for the markets. So I would say that for the next year or two, the strong earnings momentum should continue as far as the index is concerned, and even outside the index.
Rahul, what are your thoughts on the areas of the market which have not done very well, where risk reward is very attractive? There may not be any clear triggers at the horizon like few others, but at least they come at way lower valuations versus they have traded at in the recent past. Do any names or at least sectors or themes come to your mind, or you're finding it really hard to look for margin of safety in this market?
When the index is at all-time highs and the mid-cap index has delivered a 50% return in 9 months, it's difficult to be super bullish on the markets. Having said that, there are spaces, especially in the mega caps, where over the last 3 years, returns have been far more muted as compared to the wider market. Some of those sectors have delivered significant earnings outcome over the last 2-3 years, and therefore there is no reason not to believe that those sectors will come back into form. Mega caps is clearly a theme that should mean revert, and actually there should be a mean reversion tailwind to this to the mega cap stocks, especially when FIIs start coming back, because ultimately FI, these are some of the favorite sectors and stock of the FIIs. So that's definitely the first theme. The second theme, I think, is quality. With markets at all-time highs, there's always the potential that markets might be more volatile going into the next year. In fact, the India VIX has already moved up from 11 to 14, so that's almost a 30% jump, right, over the last month or two. And we do expect that the market volatility will be higher in the coming year. There, we believe quality stocks will actually give a natural floor. These are the stocks where typically if the index comes up by 10 to 15%, you will actually be emboldened to double down your bets, right? So definitely quality should be a theme going forward. Third one is earnings. We do believe that the stocks and the sectors which would do well in the coming year would be those where the stock movements will be underpinned by strong earnings growth. And therefore, again, growth as a theme appears more attractive than value at this point in time. So I would say, those are the, sectors or themes that we believe should do well in the next year or two, even in the context of, markets at all-time highs.
One last word before we let you go. Yes, policy continuity is something market is pricing in now. Even cuts in US is something. The change of stance from Fed governor has started indicating it, and of course the PCE data also But have Indian markets started to pencil in a rate cut as well mid next year onward, or right now it is too early to really talk about it, and it's not in the price yet?
Sure. So I would say, you know, uh, the answer is partially because we have had on the wider global market, we've had false dawns earlier where people were expecting, markets and investors were expecting rate cuts much earlier and much sharper than what have actually happened. So from that perspective, there is a bit of cynicism about rate cuts, even though that cynicism is reducing significantly with every passing day. So I think in terms of the global interest rate outlook, there is now a clear consensus emerging that interest rates will start coming off. In India, I think we've seen inflation of 6%, 7%, 8% earlier as well. So for us as a country and as a market, these inflation numbers have not been scary at all. I think so far the monetary policy has been rock solid, and obviously we have seen rupee to that extent being really solid over the last 2-3 years in the face of all this economic and political uncertainty around the world. So I would say, given all those things, given a relatively stable rupee, given inflation which is sub 6%, given core inflation around the 5% handle, the probabilities of interest rate cuts in India going forward are going to increase, and the market should definitely get a tailwind because of that. Have the markets harvested all the tailwind, have front-ended all the earnings of all those potential interest rate cuts? We don't believe so. There's some more to come around that factor.
All right, Rahul, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank you,
That was
Ajay.
Rahul Bhuskute of Bharti AXA Life Insurance, the CIO, and he was discussing about his view on the market and the way they are looking at things taking shape.